Holger, give me your prognosis of the world economy as seen through the U.S. Is it, in good shape? Are we creating quality jobs in the U.S. or not so much?
I'd say the world economy is more or less in normal shape. You wouldn't really say excellent or good shape, but it's in normal shape. Especially in the Western world, what you see is that private consumers are spending, governments are spending, if anything, a little too much in places. Residential construction is solid. It is business investment that is still hurting from the damage of Trump's trade wars last year. But if Trump this year restrains himself in terms of trade wars, then business investment trade will come up. And over the course of the year, the situation in the global economy will get slightly better.
What about the U.S.?
The U.S. is right in there. The U.S. is less trade and manufacturing dependent than Europe. As a result, the U.S. has not slowed down as much as Europe in the context of the trade wars. What we will likely see is that the U.S. consumer hangs in there, but that U.S. business investment and the inventory side will come back to normal, raising U.S. growth from rates probably currently a bit below 2% in the first instance of the year to a bit above 2% in the second half of this year.
Marija, how would you describe actually the state of the U.S. economy right now?
I probably won't disagree too much with what already been said. We think that U.S. or global economy is okay. It's not great. It's okay. What's interesting to us is central bank's reaction function. They seem to be dead set of kind of this asymmetric reaction function. Bad news is rates going down. Good news, rates not going up too much. So that's actually a great setup for risky assets. So that's where we are.
At the moment, Marija, markets are expecting the Fed to cut twice, right? Is there a danger that suddenly inflation picks up and is much higher than we expect it to be?
I think if inflation picks up, that's very dangerous. I would probably say that the chances of that are fairly low still. So yes, if inflation picks up, that would be very, very dangerous for financial markets. They're not expecting it whatsoever, but we see very little kind of inflationary pressure building up yet. They might, but not yet.
Yeah, I feel like I'm a broken record every year. It's like, is this a year where we see higher than expected inflation in the U.S.?
Well, actually, this may be the year where inflation edges up somewhat. We see some signs of that really happening. We see some signs of the stronger labor market feeding through into costs for companies. But with likely some gain in productivity growth, we will keep that contained. And on top of that, the central bank's tolerance for a bit higher inflation is very high. So it is not the question whether inflation will pick up a little. It's the question whether inflation will skyrocket so much that central banks would worry a lot. And that seems indeed highly unlikely for this year.